filing, yes, our tax filing function. I'm very pleased to host Mr. Mark Nsubuga Nagenda, who is a tax consultant from Mark Nsubuga and Company Advocates, and he has 16 years of tax and audit. You are all very welcome. We have about 26 participants. I'm going to give you a moment to introduce yourself in the chat. Tell us your name, tell us the name of your business, so that we can get to know each other. So please put your details in the chat. We have about 5 minutes to do that so that we can know who is here. And as Mark does the presentation, I'll also ask you to put your questions in the chat. He will do a presentation and then we'll have a question and answer session after that. So very quickly, share the link. Or if people haven't registered, I think they still have time to join us. We are here for an hour and 30 minutes. And I'm also going to ask Derek to share the link for the business health checks. If you want Enterprise Uganda to send you a business consultant, please register on the link that Derek is going to share with you, so that we can visit your business and check how healthy it is. And probably after Mark has given us a presentation on taxing, we will be able to tackle that aspect of filing tax. Those who have just joined us, my name is Belinda Namtevi. I am sitting in for Mrs. Rosemary Mutiable. What we are doing right now in the next 2 minutes, we are introducing ourselves in the chat. So give us your name and the name of your business. You are all very welcome. Yes, we are introducing ourselves in the chat. If you have just joined in, make sure that you give us your contact, give us the name of your give us your name and the name of your business. Please put those details in the chat. And also shortly, Derek will share the link if you would like to register for a business health check by Enterprise Uganda. Derek will also share that link. And when we start the presentation, you can also put your question in the chat. We'll be able to pick it up so that Mark can answer it. We are discussing taxes this morning on the Business Recovery Series with Enterprise Uganda. And my name is Belinda Namtevi. I'm sitting in for Mrs. Rosemary Mutiable. We'll be starting in a minute. So let's go through the introductions very quickly. Welcome, everybody. I see we're now 31 in the chat. Please tell your friends to join in, share. If they haven't registered, I think they still have time to do that. This is a very important discussion for us business people. I also run a business, by the way. I'm also a business person. I do business. I would not be here telling you about business when I do not. I also do struggle with my taxes sometimes. If you have seen the Ondaba brand on the streets, that is one of the businesses that I do. But professionally, I'm a branding and communications consultant. Okay, so this is a space for business people, and we are happy to host Mark as the tax consultant to tell us about taxes. Okay, so it is 5 minutes after 9 o'clock. The people who have just joined us, yes, we are making introductions in the chat. Give us your name and the name of your business. And also if a question comes up as the discussion goes on, please put it in the chat. Mark will be able to answer it. I would like to invite Mark right now. Mark Nsubuga, our tax consultant today. Hello, Mark. You're very welcome.
Yeah. Thank you, Madam Namtel. Thank you, Madam Namtel.
Mark, I can't hear you.
Thank you, Madam Namtel. Can you hear me now?
Okay, so in Uganda, Mark is my brother. Yes, I can hear you. So I was telling our colleagues that in Uganda, you are my brother.
Yeah,
So I'm
you.
very happy that you are the one who is speaking to us today. Mark Nsubuga Nagenda is a tax consultant from Mark Nsubuga Company Advocates. He has 16 years of tax and audit, and he's here to tell us about taxes. Mark, you are very welcome. How is your morning today?
The morning is good. Happy to be here, happy to be hosted here, and happy to share the knowledge. Yes.
Okay, great. So Mark, before we speak to you, it has been mentioned that taxes is one of the top 3 challenges that business people face, according to the Uganda Entrepreneur Ecosystem Initiative Report 2018. And we have so many people starting businesses. Some of them do not do tax planning. And then along the way, they have to interface with URA and they have to start from scratch. And on top of all the challenges we have as entrepreneurs, they have to add on the burden of not being tax compliant. So this morning, I would like you to tell us, okay, of course, you're going to give us a presentation, but we are hoping that we'll be able to learn why we need to file our taxes. But most importantly, as we go through the business recovery series, we hope that you'll be able to give us ways in which we can be able to sort out our tax function so that we are compliant. Okay, Mark, you're welcome.
Thank you. It's good to be here. We are going to discuss about taxes and their compliance. The most important thing about taxes is to plan. There's a Uganda saying, meaning that if the tsunami is coming, you're prepared. So in this case, we are going to, an important aspect we all need to pick as business people is that we need to plan. Plan beforehand. Don't wait for circumstances to first pass, then you start planning. So you plan beforehand. Yeah, so we are going to go through the presentation, various matters, and then we see how to maneuver the taxes such that we are ahead. In all that we do. Yeah, so we shall begin. Yes, so the screen share, can you see it?
Yes, Mark, I can see your screen.
Yes. The topic for today is, have you filed your taxes? Why, when, and how? Why, when, and how? So the dates, why, of course, a person may ask, why do we have to file our taxes? Yes, I'm Mark Nsubuga Nagenda from Mark Nsubuga Company, Uganda House. Those are my details. Yes, so why do we have to file our taxes? We begin. It's the citizen's duty. As the golden laws say, give to Caesar what belongs to Caesar. So ideally, as each citizen, we need to give to Caesar what belongs to them, and we also enjoy what's yours. Usually what belongs to Caesar, in many instances, is only 30%, and then the 70% is yours. So the 30 is given, then the 70 is utilized. Yes, then, of course, many times the question arises, if the taxpayer does his duty, is the government also doing its duty? Yes, it's the duty's government to ensure that there are better roads, bridges, institutions, social infrastructure, that is, when it comes to the hospitals, schools, and everything. It's the government's duty. So let's do our part, and the government also does its part. Yes, our area of discussion today We shall discuss about pay as you earn. It's an income tax, withholding tax. Income tax, we shall look at corporation tax, presumptive tax, rental tax, capital gains tax, petroleum, VAT, dispute resolution mechanisms. At times you may not agree with URA on what is done. So there are avenues for you to be able to be heard accordingly. Then there is also extension of filing returns. In case you're not able to file on time, what do you do? All those we are going to look at today. Yes, so we shall begin with pay as you earn, which is the taxation of employment income. Yes, it's basically, it's paid by those who are in employment, and the employer collects on behalf of the government and remits it to the government. That's why, and that's how you come up with the name PAYE, and it operates differently in different countries. But for now, let's look at how it is in Uganda. And maybe we shall go back to the definition. Employment is just it exists where there is a relationship between master and servant. And then at times the relationship is not clear, but it's up to us to know that this is the thin line where employment is, especially for the employers, because employee does his work, but then there's also sometimes an independent contractor. Now, employment versus independent services. Yeah, characteristics of employment: there's payment at regular intervals, there's constant pay irrespective of amount of work done, then work can't be subcontracted, then service provider provides the tools of work. Then, yeah, the characteristics of employment: it's the time of work is fixed, the person is supervised, the contractor doesn't directly benefit from good management, which is a challenge, but of course, sometimes can be a bonus given, there's training given, then even the contractor is paid during sick leave. Then when it comes to the employment law in Uganda, is when you look at the definition of employment under the Income Tax Act, it could be an individual employed in a company, or it could even be the directorship. If you're a director, you're still an employee, or even when you're holding a public office, it's still employment. Yeah, so we go ahead to analyze who a resident individual is for tax purposes, because tax has its classifications, and we always need to know about the classifications so that we are well compliant. Now, and a resident individual for this case is a person who has a permanent home in Uganda. If you have a permanent home in Uganda, yes, you can be considered a resident. Then 183 days or more, an average of 122 days, or even a government employee posted abroad. For tax purposes, you're still a resident in Uganda. Yes, then move on. Yeah, then, so yes, PAYE applies to residents and even non-residents. And income could be in terms of revenue in nature or capital in nature. Revenue could be just normal salaries and wages, or capital in nature, there could be a benefit given, like if an employee is given a current, the appropriate taxes have to be calculated. Then PAYE is applicable for non-residents if the employment services is rendered in Uganda. Then there is no PAYE if the non-resident performs their services outside Uganda. So we look at where there is taxable and exempt employment income. Of course, the taxpayer, you need to know what is exempt, such that where URA inquires, you notify them that it isn't, because URA has the right to inquire and you have the right to give an appropriate feedback. Yeah, so the taxable income is salaries, wages, bonuses, allowances, if there is discharge employee benefits, then we see how the benefits in kind can be quantified and paid accordingly. Yeah, some of the benefits in kind can be shared. Yes, if an employee is given shares, then the consideration has to be quantified. Then gratuity, terminal benefits, all those need to be looked at. Then those that are exempt, they include the pension, reimbursement, subsistence allowance if you go up country, for especially business-related work, the accommodation and travel and meals on duty, those ones are exempt under the individual and allowed company. Then also meals, refreshment taken on equal terms. It has to be equal terms as per the Income Tax Act. So if it's a meal available to all the people. Yeah, then income that's exempt from PAYE. You have employment of police, prisons, army officers, all those. It's income, but it's exempt from PAYE, so there's no tax on it. Then also, if you've worked for 10 years or more with a given employer, the terminal benefits, you only tax 25%. Then there's also the issue of passage costs. If a person is recruited coming from abroad, coming from another country into Uganda for the first time, then the passage costs are also exempt. But when they keep coming back, going back and forth, then the rest could be charged accordingly. Yeah, then still more on exempt income, if there is any benefit of 10,000 or more in a month, then where there is some lump sum, then foreign sourced employment income, and then yes, basically foreign sourced employment income of a resident individual taxed abroad. All those would be exempt. Then how do we calculate the benefits in kind? Yes, the benefits provided under an arrangement need to be quantified, whether it's past, present, or future employment. The benefits, all those benefits have to be quantified. So if before you join a workplace, there's something given to you, then it has to be computed. Of course, the burden is on the employer to compute it accordingly. Then also present benefits when you're in a workplace, but also when you leave, if there are benefits, they have to be computed accordingly. Yes, then yes, the taxes, company car, if it's used for private purposes, if it's a company car and it's used for office work, then it is. But if it's for private, then it has to be, the benefit has to be calculated. It's the same for house, where there's reimbursement of housing expense, then it has to be calculated. Where the employee is the tenant, because sometimes the employer can give the employee a what? A house. Then also the house rent, where the employer pays for the employee. The appropriate calculations need to be made. Then also house owned by employer, also the appropriate amounts have to be calculated accordingly. Yes, then we move on. If they give you a house help, if they give you a driver, an assistant, if the employer is giving the employee, even utilities, school fees, yes, you find sometimes that the contracts given are good. So where it applies, so as the employer, be alert, quantify accordingly, and then yeah, where there are private tickets, there's extraordinary meals, entertainment. Yes, then even waiver on employee obligation. It all has to be taxed And yes, we need to have this knowledge such that we stay ahead, make right computations, right and appropriate computations such that everything is okay. Do the right filing, and yeah, like we said, there is assessing monthly basis, on a monthly basis, and return is done and then filed accordingly. Yeah, we continue. Yeah, there is also the issue of loans now, where an employee gets a loan from an employer. The benefit has to be calculated accordingly to the interest based on the BOU discount rate at the beginning of the fiscal year. The fiscal year, which is the government year, is 1st July. Yeah, so we get the rate and make the necessary computations of the benefit. Then it's only loans that are in excess of, of 1 million. Yes, so we look at also the calculation of PAYE. So PAYE is total employment income times the appropriate tax rate. Then we dive in a bit. You have to total up all the salaries, wages, allowances, and in determining the benefits. 1 second for a civil break. Thank you. Yes, we go on. Yes, for residents, now we always need to know, is this a resident employee? Usually it's the burden is on the employer to appropriate to determine all this. So there's 235, then between 235 and 335, 335, 410, and above 410. And then where the amount exceeds 10 million per month, this is amount per month, an additional charge is imposed. Then also for non-residents, we've given the non-resident determination earlier, and then it's also computed accordingly. Those are the rates. Then in some instances, foreign employees working in Uganda sign employment contracts and entitling them to net pay. Or even if they are locals and the person says, I want this as the take home. Now, on the screen, you can see the formulas. Those are the formulas, how you work it. If there is NSSF hasn't been considered, and also where NSSF has been considered. So you can easily work it, backwards. Then you can gross it up. Yes, then employers pay obligation. Now this is to the employers and even the accountants. We always need to be accurate, stay ahead, do the right computations, do the right filing, and yes, and be compliant. Yeah, that's our duty as citizens. Then we have to withhold pay before paying employees. Otherwise, sometimes when there's no withholding, then it becomes a challenge. So we always have to know beforehand. Then you file, pay every month, and then you also remit, and then also maintain and keep records for pay for 5 years. And also something that I've come across sometimes when you're engaging with some people where they may not have registered. Of course, the burden is on each person to register such that you're compliant. Now that the knowledge has been disseminated, yes, register accordingly such that there are no risks of URA coming to find you. So it's better when you make a self-declaration to avoid all these penalties, because when the key aspects of tax planning is the key aspects of staying ahead is to plan, because the biggest challenge that arise are interests and penalties. And now the COVID challenges, so of course those would increase the burden. So like the Uganda saying, so let's stay ahead. Let's stay ahead. Yes, failure to pay or failure to withhold will result in tough collection. So let's avoid all these, like attaching properties, collecting from banks, closure of persons' businesses, all those. Let's try and avoid them by staying ahead, because URA will do this, but let's be ahead. When they come, you just give them the records and everything is okay. Yes, we move on. Yes, grossing up, medical insurance vis-a-vis an allowance, all that can be done. Yes, you can put the questions in the chat and then we shall reply them accordingly. Yes, we move to the next one, withholding tax. Withholding tax is an advance, is an advance payment of income tax. So it's just your money taken in advance, where the employer, where the person paying the tax, they're different people. They're different people too. Withholding tax is basically advance income tax, so it applies at different stages. And where there's the withholding, there is a tax credit certificate given. And most of the times when you make these transactions, they will take off withholding. This basically applies for the what? For the business transactions. Then you find a list where there's withholding. Usually when you're importing, some of these things they'll withhold because they want to encourage business operations. So then we go to withholding to the supplier. There's, even when you're not a gazetted agent, you need to withhold where there's interest paid to any other person, interest paid to associate companies, and also dividends to residents. Now, some companies give dividends, and where you give dividends, where a company has performed, you need to withhold the appropriate tax. You find like public listed companies, they'll withhold 10%. Then the other private companies where you've done a dividend, withhold 15%. Or even when there are these royalties, technical fees, consultancies, natural resource payment, management, and professional fees. Yes, withholding has to be done accordingly. Then of course, when the withholding is done, because sometimes there's a complaint from the business people, this person is taking off my money, what will I do? But yes, when the withholding is done, like we've said, it's income tax paid in advance. So where your TCC is got, when you do your tax computation, it will help reduce your tax burden. It's like we said, it's income tax paid in advance. Then there is the issue of also where there are non-residents in in countries where we have double tax agreements. So all there the rates are a bit reduced. So there are various countries where we have double tax agreements. So if you have a business here and a business in that country, you find the rates are a bit, the rates are a bit favorable. Then we utilize our withholding tax. The taxpayer after withholding has to remit it accordingly. Then the taxpayer should obtain the TCCs. A plus for URA nowadays, they've made the system in such a way that the deductee can also generate the TCC as well as the payee. So there's no more worry of the person took off my withholding and then you have to run up and down. The moment you've given them your TIN, then you just do what? You just generate the TCC and move on with your operations. Yeah, so the planning areas is you where there are businesses, sometimes you can apply for withholding tax exemption. Usually some of the some of these big companies, they at times some of their money is locked up in working capital. So the benefits to the taxpayer apply for withholding tax exemption. Yeah, withholding tax exemption, so you can freely operate and also be compliant. Yes, then Withholding is almost the same as pay in compliance. Withhold, then remit to URA, file the appropriate return, keep records for 5 years. Then again, questions, put them in the chat. Then also another issue is, yes, this as we do the training, these slides that you might have are just basically for learning, but they are I'm one of the consultants, you can consult me, but there are also other consultants in the chat. To get more specific details, you need to get to what? To an appropriate consultant, because this is for training, but you need to get the further details. Then we go to the corporation tax. Yes, corporation tax, we are going to see what it is and how you compute and how to be aware, how to stay ahead. Yes, we shall begin with presumptive tax. Yeah, presumptive tax is usually the people whose turnover is below 150 million. That's a good benefit for the people who are just starting out or where they are small businesses. You might have your small kiosk or small business somewhere, and if it hasn't gotten to a turnover of 150 or more, and you're a resident person, then you can file one return. You can file the return, pay the taxes, and it sorts out the whole year. So you don't have to run up and down with all these books. You just get total sales. You just record them and keep record, and then you also notify the commissioner of the return. And the other thing is that this doesn't apply for the profession. Professionals under the Act is a person of a diploma, a degree and above of the expertise. Then we move on. Corporation tax. Yes, corporation tax is charged at 30%. Then yes, charged at 30%, not of turnover or sales or income, but it's on what? It's on the chargeable income. So of course, then the question will arise, what is the chargeable income? Chargeable income is the gross income, you less the allowable deductions. Now the deductions have to be those that enable you, that you have used, that have been incurred in the production of income. That's what it is, not other deductions that necessarily don't apply. Then the expenditures have to be revenue in nature or capital in nature. That is just the issue about deductibility of expenses. Then when you come to accounting, because there has to be a meeting of the minds on the way you determine your profits. The Income Tax Act has guided that we shall use generally accepted accounting principles. And then each taxpayer needs to keep records on real-time basis. Sometimes, like now, the year is about to end for those whose year is July to June. So sometimes there is a panic, but ideally, keep your records of each month. Keep your income, keep your expenditure, keep your assets, keep your liabilities. And when you're 6 months into the year, you can easily do a provisional return. Now the provisional return is just a notification. Now, when you have accurate income and expenditure, then you can easily know the profit to pay. And then, as it is like now we're in June, almost 12 months before the year ends, where you see that the profit has gone all low, then you can revise your return accordingly, such that you don't charge you, the URA doesn't charge you for underestimating the provision, your provisional return. Then the other issue is the other options of cash or accrual basis. Yes, deductibility of expenses, there's meals, there you look at the meals, the appropriate sections, debt write-off. Now, debt write-off is also another issue with some people where there is a bad debt. All necessary steps need to be taken. Business people, notify your lawyer where a debt has gone wrong and ensure that they follow it up. That's one of the ways that you can write it off. Otherwise, it becomes a challenge to prove it. So where a debt has gone bad, see that you engage your lawyer, follow it up as evidence. Yes, we move on. Then there's the non-allowable expenses. So all those need to be catered for, like the capital expenditure. Then for the capital expenditure, it will come under wear and tear. Then relief for trading loss. This is an important one, especially in these COVID times, where you've made a loss in the previous years, you can carry it forward. Because yes, these last 2 years, there have been challenges here and there. So where there's a business loss, you need to record it and then carry it forward accordingly. The other thing about the farmers, where it looks at the farmers, now the farmers may deduct the farming loss only on farming. Don't mix up the farming loss into the rental income, into the business income. Each class has to maintain its own loss. There is no mix up of. So farming alone, business income alone, rental where there is, if it's applicable. Rental, we shall look at it. Then there's initial allowance. Initial allowance can also be given where applicable. Yes, depreciation, wear and tear also applies. Yes, now there's new classes of assets. If you have your computer, it gives you a benefit. Motor vehicles, office equipment, you make the necessary adjustments. Then there's also the industrial deductions and industrial building deductions, approved hotels, hospitals, manufacturing for those who have done appropriate setups. Then also startup costs. Sometimes when you're starting up the business, there are at times the costs are many, but you record them and then you write them up over 4 years, a 4-year period. Yes, then also the intangible asset amortization also has to be done accordingly. Then mineral exploration for those who are into mining, which I'll have a bit of it. Then repairs and minor capital equipment, like let's say you buy a small item that's below 1 million. You could buy maybe a binding machine, a small one. Now those ones you can expense immediately. And the tax computation, to get an appropriate tax computation, you start with the profit, add back disallowed expenditure, then capital allowances, then you adjust accordingly. Yes, we are doing all this such that we stay ahead and that we can know and make appropriate computations. Yes, that has summed up the business income. Now we look at rental income, which is also another popular tax. People have set up rentals. They make, when business is good, then the person puts up some, so it could even be a company. Now, we also need to know that, yes, rent is derived from letting or leasing property, whether commercial or residential, and then we apply the appropriate rates. So it could be for a year of income, do the appropriate return, where you can then do the provisional return. So for a given year, let's say July to June, you do the provisional return by 30th June. Then you make payments quarterly. 30th September pay quarter, 31st December, 31st March, 30th June. So maybe you've determined your tax to be about 1 million to pay. So you pay 250, 250, 250, and 250. Then for the year 2020, 2021, 2022, it's been approximately 7.5 of the gross rental income. Then in the new year, it has changed. Then in the old year, it was also different. So we need to take changes. We need to take note of the changes. Then the return is done 6 months at the end of the tax period. Then also another critical matter nowadays, capital gains tax. Capital gains is computed on the excess of disposal proceeds over the cost base of the proceeds. Now, capital gains sometimes can apply where it actually applies on business assets alone. If it's not a business asset, then there it's outside the scope. So take note, where there's a business asset, it's defined under the Income Tax Act. The business asset has been sold, you've disposed it off, and you've made the disposal. So calculate the appropriate tax. Then capital gains doesn't apply for business assets disposed of before 1st April 1998. So even those timelines need to be taken on, need to be known. Then payments should be of transaction. And yes, there are consultants on board. Sometimes where a transaction has been done, you need the guidance of the consultants. If you're not sure of what to do, yes, there are consultants in the inbox. You can get to them even as we are consultants, such that you know the appropriate amount, because capital gains has posed challenges. So be ready, do the right computations, do the appropriate filings, and yes, get peace of mind, be a good citizen. Then there's also petroleum operations. Petroleum operations, yes, as it's titled, it shouldn't be mistaken for if I own a petrol station. No, this one is a bit different. This petroleum operations is basically if you get a license from the government, if the government gives you a license for a mining right, or you enter, or it's a person who has entered a petroleum agreement with the government. That's what it is under petroleum operations. Then they file also the returns within 6 months of the tax year. They pay quarterly and file final return also. File the final returns also. Then there is the other issue also arising, VAT. VAT is also a hot cake. VAT is a hot cake. And for VAT, when it comes to VAT, we always need to know, are you dealing in standard rated supplies or zero rated supplies? We are going to go down to look at it. And then we need to know the VAT fraction. We are also going to give simple examples such that you do your planning accordingly. Do the planning accordingly such that you stay ahead. Yeah, there's output VAT, VAT payable by the buyers, final consumers bear the burden. Now, the nature of VAT is that it's paid by the final consumer. So the final consumer passes it to the next person in the chain, and then the next person. It's just like a simple example. If you buy airtime of 1,000 Uganda shillings, yes, basically, the actual cost would be about 850. The 150 would be VAT. So if you're VAT registered, then you can claim that 150 and pass it on and put your expense as the 850. But otherwise, if you're the final consumer, you pay the 1,000 and you expect it accordingly. For the business transactions, if it's personal, you bear the cost. Then input VAT, also the concept of input VAT. Now, another issue to enable us stay ahead in the areas of taxes is we have to register. PAYE, where the factors fall in place for PAYE, register accordingly and file. Where the factors fall in place for the withholding tax, register and file accordingly. It's the same also for the VAT. Where the factors fall in place. Of course, now you're going to ask me, where have the factors fallen in place? The law says where you exceed the threshold. So the annual threshold is 150, or that is per year, or where you exceed 37.5 in 3 months of standard rated sales. not of exempt sales. We are going to look at them just ahead. Then professionals, you could do a voluntary registration, and even government agencies, those ones have to always do. Yes, then voluntary registration. Yes, you could say, even before you hit the threshold, you could register. And the things that you have to do is ensure that you keep proper records, have a place of abode when you register, because the commissioner may refuse to register you if you have no place of abode, or you don't keep records, or if they find you're not fit. Well, the discretion will be up to them, but the burden at least is on you to have the knowledge and do what is right at the appropriate time. Then the benefits of voluntary registration, you can claim the input tax, because some business people have met and they say, oh, I have a lot of this input, but you can only claim it when you're registered, and then you enjoy the benefits. Otherwise, it would be a full cost. Now, the taxable supplies, that the act, when you come to the VAT Act, the taxable supplies are notified there, though there isn't. They only give the zero exempt. So you need to check that you're not in the zero rated and the exempt, and then you'll be able to comply. Now, zero rated means that you're charging VAT at 0%. For example, the exports, of course, the exports, if you're exporting to Kenya, to America, there, that you charge zero VAT, because we try to encourage exports. Now, when there's inflow, it's good for the company. It's good for the country, knowing that people are bringing in funds, and it's benefiting the local person. Yes, then there's the exempt supplies, the financial services, the education, and all those. Yes, then input tax credit can be enjoyed accordingly. Then the non-allowable input, then there's VAT on imported services, where applicable VAT on the imports, all those we can take note. Then we also need to look at the output tax, the VAT points. Yes, sometimes there's the issue of payment of goods, invoice issued, and delivery. So whichever is earlier, then the VAT is determined. Then accounting for VAT, the VAT has to be accounted for on cash basis or invoice basis of accrual. You apply depending on the level at which you are. Yes, then we move on. The VAT formula is calculated. Then a simple example, when it comes to the VAT returns, the due dates, we always need to know the due dates. Yeah, for example, if it's the VAT, VAT has to be filed on the 15th day following the month in which the transaction is done, because VAT is assessable on a monthly basis. So if like June 2022, by 15th July 2022, the appropriate return has to be made. Yeah, we always have to stay ahead, yeah, to be compliant. Then there's invoice basis accounting, then there's also cash basis accounting. We move on a bit. Yes, so this, if you forget anything else, make sure you don't forget this. Overall tax planning, we need to make accurate declarations, return on time, pay taxes on time. That's the way to avoid penalties and interest. And then engage approved tax agent advice and tax consultants. So plan beforehand. When the year starts, at the start of the tax period, do the planning. Don't wait for the last minute or for the 11th hour to do the planning. Do the planning at the start of the year. Now, like this year is ending. When the new year starts, start from June immediately to plan for July, for starting July 2022, to plan for July 2023. The planning has to be done early. Yes. Dispute resolution. Yes, many times there are challenges between the taxpayer and the tax authority. Now, where the challenges are, you can do a reconciliation where URS sends you an amount that you feel, a reconciliation that you feel you're not contented with. You can also reply with your own reconciliation and you communicate it to them. You can communicate it to them in writing, state your position, because they also communicate theirs, and the details have to be known. In some tax cases, sometimes the taxpayer gets an amount. Now, when you're the taxpayer and you've gotten an amount, say you have an outstanding of 10 million, it's your right to ask the tax authority, how does the 10 million arise? Which period does it relate to? And the tax authority has to advise you. Then you do an appropriate reconciliation, because the figure just can't fall out of nowhere. If it's PAYE, they need to notify you that it's maybe January, February, March, April, May, June of a given period. Same for withholding tax. Now, when it comes to income tax, they have to tell you the appropriate year. Take note of those. Those are very critical, such that you don't just get a figure and you say you don't know how it arises. They have to tell you. Now, also where URA is not contented, they can send an assessment. You, the taxpayer, you can also object accordingly. Now, where URA is not contented, they will make a decision. And where you've objected and URA hasn't made a decision, after the 90 days, you can make an election. Now, where a person is probably not contented, there are the avenues, the taxpayers, to go to what? To go to the tax appeals tribunal, and then also to the High Court accordingly. All those avenues are there. Then it comes also to the issue of, it comes to the issue of extension to file. Sometimes a person may not be ready or anything like that. So you have a right to apply to the commissioner. Now, when it comes to income tax, it's 90 days following the end of the tax period. So let's say that people on January to December, their returns are due. January to December, their returns are due by 30th June. So by 30th June, if you're not ready with the appropriate return, then you can ask for an extension. So when you count the 90 days, it would be July, August, September. So you apply for an extension and then you apply to the commissioner. The modules are there, you apply in writing. Then when an extension is approved, then the commissioner will reply accordingly. Then within that time, you ensure that you file accordingly. It's the same for PAYE and VAT returns. You can also apply for an extension. Like the times when we're in the COVID and then you get locked down. Yes, or sometimes there can be unique scenarios. So there we have our rights to, we can enjoy our rights. Yes, I've been your presenter, Mark Nsubuga from Mark Nsubuga and Company, and we are at Uganda House. And yeah, question and answer. Thank you for listening. Yeah, for God and my country. Let's give it our best. Yes.
Yes, indeed, it's for God and my country. Thank you very much, Mark Nsubuga, for your presentation. Quite educative and very timely for our business recovery series. Good morning, everyone. People who joined us while Mark was still presenting. I see that the session is now full. Yesterday, we were talking about taxes, why you need to pay them, how you need to pay them, and all the information that you need to know. And my name is Belinda Namteli, and I'm sitting in for Mrs. Rosemary Mutiable. Now, we have about 35 minutes to the end of this session. We are going to take your questions. Please put your questions in the chat. We'll endeavor to answer them as much as we can, or you can put up your hand. Mark, I will start with my questions. I want you to help all of us. This is a business recovery series. So of course, we are all recovering from the COVID season. I would like you to anticipate the challenges that businesses could have had during COVID. and the tax challenges accruing to that season for business people. And let us try and give some kind of advisory of what they need to do to make sure that they are compliant. And I also know, Mark, that during COVID, there are many of us who pivoted and are now started new businesses. I heard you talk about the presumptive tax. So I want you to also talk about that. What are the tax obligations for the people who have just started their businesses to make sure that they catch up? I know this tax compliance is something that we all need to grow into. Okay, so please speak to those two things. One, the challenges that you anticipate could have arisen from the COVID challenges for businesses, and then the taxes for the new businesses that we started during COVID. And then we will try and go through the questions in the chat. Mark?
Yes. Yeah, thank you, Madam Belinda. Yes, for the people who are running businesses prior, okay, before the opening up, where there were the benefits, some of the things that can be utilized, where there were losses, then you can carry forward the appropriate losses. Because yes, businesses faced challenges. So like I showed the section 38, losses carried forward. So where a business suffered a loss, the loss can be carried forward and utilized until the businesses recover. Some people had to pay like rent, even without income. So where there's an expense incurred and there's zero income, it results in a loss. Now the loss you can carry forward until the business recovers. That's one of the benefits. One of the issues that we can utilize. Then you mentioned the issue of presumptive. Yes, presumptive, the law states that the people below 150 million turnover below 150 million turnover, let's say you have your kiosk or you're in the market or somewhere, second market anywhere, even if it's Kampala Road, you have your mobile money shop, something like that. If the turnover is below 150, then you can do the presumptive return. And when the turnover exceeds 150, then you have to do what? You have to do proper accounts. Then you also, the good thing about presumptive is that you do one return. When the return is done, it generates a payment slip and it sorts out the entire year. But we always need to be alert that you don't fall out of the presumptive bracket. You have to ensure that you're in the correct position accordingly. Then you also talked about tax obligations for startups. Now, when a person has started up, like we mentioned, if you started on a business and you have staff, then you need to look into matters of PAYE. Where you have taken on staff, then you need to withhold PAYE. Actually, you first register for PAYE, then withhold accordingly. Where there is PAYE to be withheld, then file it accordingly. That is it for startups to know. Then also withholding. Where there is withholding, where you're paying the professionals, withhold 6%. Those are some of the obligations as a startup. Then also you need to check, are you in standard rated sales like we've mentioned there? Then you register for the VAT where it applies and you charge the VAT accordingly, because when you're a company and you have standard rated sales, you're acting on behalf of the government. You collect on behalf of the government and then you remit accordingly. So where your sales exceed the 37.5 of standard rated, then register accordingly and charge. Let's say you've hit maybe 200 million, something like that. Now, when you reach that point, then for whichever sale you make, let's say you've made a sale of 10 million. Let's say you're selling, a simple example, maybe stationery. So when you have 10 million as, yes, this is what I want, then you put on 18%. So you make an invoice of the 10 million and add on 1.8. And then the 1.8 is passed over accordingly. And then you as the business person, you maintain your margins accordingly. So we need to pre-plan such that you're not making a loss because you don't know that taxes to pay. And then you keep your margins intact because you have to be profitable. Yes, maybe the other thing is the NGOs. We hadn't talked about the NGOs. The NGOs also, PAYE applies and also withholding applies. Then also where you can apply for the income tax exemption. Income tax exemption is also another issue. Yes, maybe some NGO people may be here, but for the small businesses, yes, small businesses, income tax exemption may not be, but you can still apply for the 6% such that your working capital is not locked up accordingly. Yes, is that appropriate?
Okay, thank you, Mark. Yes, it is appropriate. Thank you very much. So let's try and answer some questions in the chat. I will read out maybe 2, then we tackle them and see if we can be able to exhaust all of them. Or okay, so let's do this. Let me first see if there are people who have questions. Okay, no one has put up their hand. Let's start with the ones in the chat. We have, let's start from here. Joseph Ogwal, what is the rationale of some companies being withholding tax exempt? Such companies will have better liquidity positions than those that are not exempt. What criteria is used in making exemptions over others? So that's the first question. Then Ronald Baingana asks, kindly confirm that initial allowance is still applicable. Let's do those 2. So we are not bogged down with a lot of information and then we carry another set. Mark, withholding tax exempt, what is the rationale? And then what is initial allowance still applicable?
Okay, I will start with the one for Joseph Ogwal. 6% criteria for withholding tax. Now, URA has put a checklist on the URA portal for the 6% withholding tax criteria for people. Now, it's basically they just check that, are you compliant? Are the directors filing their appropriate returns? Let's say if you're a limited company, then are you filing all your other returns? If you're VAT, are you filing and paying accordingly? The criteria is there on the URA portal. Then they check, haven't you underestimated? Have you filed all income tax returns in the previous years? That's the criteria. That's the criteria that URA looks for. Basically, that you're tax compliant. Then when you're tax compliant, paying on time, you haven't had any issues, then they can give you income tax exemption. Then also maybe what I've seen on the portal is you have to indicate the tax agent accordingly. Yeah, so that's some of the criteria. Any person can apply. Any person can apply, and then the list will eventually be published. Yes, the list will be published, and in case you don't get, you can still use your 6% credits to reduce your 30%. Then maybe you apply in the following year. And where there is excess tax paid, it can be used it can be carried forward into another year. Yes, that is it about the 6%. That is it about the 6%. That is it about the 6%. About the 6% withholding tax. Yes, it's an issue that's always arising. Then initial allowance is a section 27A. It's still given for eligible property. In the act, it says if a person who places an item of eligible property for the first time in service within Kampala or its boundaries, then they give eligible property It's there, furniture and fittings, it's there in the Act 20 section. It's about section 27. I would refer them to section 27 for further guidance, but it's there in the Act. Eligible property for business use specifically. When you look at these people who have machinery, computers, all those.
Okay, thank you, Mark. So we go, I still don't see any hands up, so we'll read the questions in the chat. Isaac Chiberu, kindly explain how the rental income for individuals is calculated now, given the recent adjustments made to the allowable amount. That's the first question. Then two, Kaduyu Abdallah asks, good morning, thanks for the knowledge shared. Is there any manual we can utilize to familiarize ourselves with this knowledge? Okay, I'll squeeze in just one more. Linda Lillian, thanks for taking us through. Back to rental tax. You said it's 7.5% of the gross rental income. I thought it's 75. Kindly clarify. So those are two questions about rental tax. There's another one here. Bob K, it's also about rental tax. If I have, say, 4 rental units and I sell them, are these rentals a business asset and am I required to pay capital gains tax? What if I have problems and I decide to sell my rentals at an amount less than what I used to construct them? Am I still required to pay capital gains tax? So let's have those ones, Mark.
Okay.
Then we shall proceed.
Yes, I'm going to answer. In case I've missed out any, you guide me. Yes, Chiberu raised the issue of rental. Yes, rental in 2021, 2022, the rate was the effective rate was 7.5% of rental income. That is for individuals and for limited companies, because the rates had been changed. In the earlier years, the rates were a bit different. So 2021, 2022, that is July 21 to June 2022 was about 7.5%. So given an example that maybe you had gross rental income of 100 million, the tax to pay would be the effective tax. I would call it the effective tax because there's the allowable deduction, then the tax rate on the chargeable income. So if maybe a person had rental income of about 100 million, then the tax would be 7.5 million. That is for individuals and for companies. Now, in 2022, going to 2023, that is July 2022 to June 2023, the rates have changed. That is the latest amendments. Now, individuals, they are charging resident individuals. It's 12% above the income of 2,820,000. So if you have, let's say, rental income of 10 million, so you first deduct the 2,820,000, then on the balance you multiply by 12%, and that's the tax to pay. However, for non-residents, the rents remained as they were. I hope that is clear to Isaac. Then there was the sale of the rentals. Now, sale of rentals, yes, sale of rentals, then you look at the issue. You always have to look at the issue of capital. You have to look at the issue of the capital gains. Now, when the rentals are sold, you look at the disposal proceeds vis-a-vis the cost base, and then you calculate, and then you less disposal costs, because you may have maybe a broker, or maybe a broker who you paid the commission, or a consultant who you gave an engagement to calculate for you. Now that would reduce the what? That would reduce the amount of capital gains. Then you pay the appropriate 30%. Then also maybe, yes, this is just for training purposes, but also need to look into the issues of VAT. Sometimes it could be sold as a going concern. if the person was VAT registered. So I would advise him to get a consultant to scrutinize, to get the deep detail, such that an appropriate amount, an appropriate computation is done accordingly.
Okay, thank you.
Yes, help me and remind me, there was a question by Kadulu.
The question by Kadulu is, I'm trying to see, yes. Okay, he's asking if there's a manual that can be shared to familiarize ourselves with this knowledge. Do you have a manual at your organization? Or actually think Enterprise Uganda should come up with a simple one that we can all use. Okay,
yes,
because the knowledge is quite vast. Okay, let's go very quickly to the next questions. Ronald,
yes, just a second, can I answer? Yes,
yes, you can.
Yes, entities can come up with manuals, but yes, for general knowledge, but each case is looked at one by one, and
yeah,
there is no substitute, truthfully, for the Income Tax Act. So the manuals we can come up with the manuals are available. Yes, it's good, Belinda, have said that Enterprise can come up with something. Yes, please do. We are waiting for the release date. We're waiting for the release date. Yes, even some of the slide notes, some guidances on the URA website. Yeah, I'll also share this presentation, but the act is also available. The act is on the URA website. I'll also share a copy of the act with Belinda, maybe for those who may want a copy of the act. Also, there are some publications like Ecopedia. There is a book published by Okuja. There's a book published by Okuja. It's a good one, guy. It's comprehensive. Yes, and such that you're exact, because when it comes to matters of the law, it has to be exact. One error and it could be detrimental. So the publications can be read for guidance, but the final is the act.
Yes.
There was another one, I think, which I missed, if you could help.
No, before we leave that,
yes.
I know as business people, we spend so much time perfecting the other aspects of our businesses, understanding the products, understanding our customers, but we usually neglect information about tax. And usually all the information is available, especially on the URA website. So I think all of us business people need to know that there is one central place where the central information is stored, and that is the URA website. Then the other information that is available, for example, from Mark or even from Enterprise Uganda, is just additional knowledge, but all the information is on the website. So let us go to the website and read. Okay, that's very critical.
Yes, and also the consultants in the chat, and some consultants online. Even me, I'm a consultant. You can feel free to reach me. I have seen some consultants, they've posted in the chat. So feel free to get to them, such that you get detailed, the case is analyzed and appropriate advice is given. Even me, I'm also a consultant. You can reach me such that we get to the core of it and advise accordingly.
Okay, great. Let's go ahead. Ronald Baingana is telling us withholding tax exemptions are applied for once a year. URA has set out compliance criteria that, if satisfied, the company is exempted. For the year July 2022 to June 2023, URA is now reviewing applications. So I think Ronald was responding to the gentleman who asked about the criteria for withholding tax exemptions.
Yes.
So let's go ahead. Christina Kadama is asking, are these tax measures applicable to a citizen of 70 years plus with no fixed income, no services like free medicals, no pension? Okay, you'll answer that, Mark. James Babumba is asking, when do you issue a notice of objection? And then these are just comments. And then Hilary Mukundane is asking, okay, so there will be a recording for this meeting. Let's go to Sylvia's question. How do I go about say my provision was 100 million and the business is low and I revise it to 70 million and URA penalizes me. So we are going to answer Christina's question and then also about this penalty from Sylvia Namutebi. Let's answer those two so that we don't lose our train of thought and then we go ahead. Mark?
Yes, there was a question from Madame Kadama. A person who is 70 years, no fixed income, no pension. Yes, now, the thing is, yes, no fixed income, no pension. Pension is not chargeable. So if a person who is 70 is doing, business, then the truth of the matter is where there's business income and there's a chargeable income, the 30% has to be paid. If a 70-year-old person is employed, then the employer has to do what? Has to withhold and remit it accordingly under PAYE. That's how they'll be paying the tax. If they have their own business and maybe a big supply, they'll be withholding to be taken on, then they do have to do a final return. Yes, so truth of the matter, it isn't about age. The person who is 70 could pay more tax probably than a person who is low, who is maybe 18. Yes, so the issue is just to be compliant. Okay. Then Christina says objection. Yes, objection. Yes, objection. You can do an objection where you've been given an assessment of any tax where you may not agree with, or where you're not agreeing and they've given you something. So you do an objection. Yes, you object in writing to the commissioner. Yes, it's just the same even when they send you an email, feel free to to reply accordingly. Yes, it's about stating your position and then you can follow up accordingly. Now, where there is a notice of objection given, you have to reply in writing within 45 days. Now, that's another issue. Sometimes the taxpayers get a notice of objection and then they sleep on it and then wake up when the time has passed. Now, the matters of tax are time sensitive. So we always need to be alert. The moment you get it immediately, reply accordingly, such that you stay ahead with an appropriate reason. And where a person may not be able to know how to go about it, yes, the consultants are available. The tax consultants are available. Yes, then also Sylvia raised the issue. Belinda, your namesake, Namuteri Sylvia.
Okay.
Raised the issue of the return. Now,
yes, there we go.
Yes, yes. How do I go about, say my provision was 100 million and business is low and I revised it to 70 million and URA penalizes. Now, we need to analyze if the provision was 100 M and then the business went low. Ideally, the provisional return is something actually, thank you, Sylvia, I'd forgotten to talk about it. The provisional return needs to be done halfway in your year. Now, before the year ends, let's say it's a July to June person, we should have done a return, a provisional in December. Then, like now in July, like now in June now, you can revise it up or down. Now, if it has gone low, if you revised it to 70 and URA penalizes you, chances are high that your final return went higher than the 70 because URA usually penalizes for underestimating. That's what would usually have happened. But otherwise, if you went below the 70 million in your final return, then they may not penalize you. I hope that helps to clarify it. And usually if business was low, maybe yes, challenges and they may not underestimate for where the provisional return is what? Is lower than they won't penalize for. They will penalize for underestimating, but over providing there will be there may not be a challenge. Hope that clarifies.
Okay, great.
Yes, and it goes back to the issue of us keeping our books on real-time basis. We need to keep each month such that by the 10th month, 11th month, you're hitting an accurate position. And then also there are sections in the Act that, like people for agriculture specifically, they can't charge them for underestimating, because agriculture is a unique business. Sometimes there can be a windfall, the rain falls, and then you have a bumper harvest. But for all these other businesses, keep the books and review in the 10th month, actually 9th month, 10th month, 11th month. And even just like now, it's critical. You find like now there are 10 days to go, and then somebody gives you a payment that turns the books upside down. If a person gives you a payment like now, because this is like the 11th month, if a person maybe gives you a contract now, so you need to revise your return accordingly. You might get a big contract signed off and you get a payment like today or in the next 2 days, then you need to revise your provision accordingly. Yes.
Okay, great. We have about 8 minutes to go. Let's see what we can get covered. This is a business recovery series with Enterprise Uganda, and today we are discussing taxes with Mr. Mark Nsubuga, who is a tax consultant, and we are now going through your questions in the chat. So Dennis Semuiga is asking, when my business is not working well, or I'm running an NGO where income is equal to expenses, in filing provisional returns, why does your query my nil return? Okay, so we'll keep that one as the first question. And then the other question is from, I'll take this one from William Worodia, who is asking, how do you handle capital expenditure beyond the initial capital contribution, especially when it is obtained from additional funds from shareholders? Do you carry this forward as a debt? Okay, here we go. Let's deal with that, Mark.
Yes, Dennis. Thank you, Dennis. NGOs. Yes, we didn't talk so much about NGOs, but at least we managed to throw in. Yes, NGOs income, where income equals expenses, filing provisional return. Yes, ideally, provisional return for NGO would be a nil because they are basically on exempt income. And actually, Dennis, allow me to say not for profit is a better term, because if you're chasing profit, then there've been recent cases where a person seemed to be operating over like an NGO, but he was actually doing business. But the lines need to be clear. Keep your NGO certificate and apply for income tax exemption, by the way. They're now saying apply for income tax exemption. So I would urge all NGOs, apply for income tax exemption, get your NGO bureau certificates ready. Yes, for URA, not to say that you're doing any business. Because many NGOs, okay, they're non-government organizations, even businesses are non-government organizations, but maybe it should be non-profit making organization, something like that.
For profit.
Yeah, and when you are queries, yes, feel free to avail them your non-profit, your NGO certificate, and feel free to tell them that yes, this is exempt income, and yes, avail all your records. Yes, because NGOs ideally would be not making what? Profit. But if you're an NGO, and then recently there was a case where I think a person was seeming to be an NGO, then got a money lending license. Now, if you step into those matters, money lending license, trading license, then of course your objectives have changed. You've now jumped into business. So it's actually a very good matter that you've raised, Dennis. There has to be a thin line, a clear line. Is your motive business? Is your motive non-for-profit? If a person's motive is business, then go the business way, because even URA will ask about it then. If your NGO stay in the lane of non-profit, and then it's exempt income, because you're not going to invoice the donor out of their good heart will come and say, oh, get something, support a good cause. This is for the benefit of the society. And then you notify URA accordingly. Then there was also William. William was asking the issue, how do we handle capital expenditure beyond the initial capital contribution, especially when this is obtained from additional funds from shareholders? Do you carry this forward as debt? I think maybe the two things got mixed up a bit, but capital expenditure, where there's capital expenditure, there's wear and tear and then initial allowance to the company. Now, this initial capital contribution, that one would be maybe like a related party loan to support the business. Yes, so I think these are a bit different. The other one is related party loan to support the business, and even if it's used to fund the wear and tear. For tax purposes, these two are different. For the capital expenditure, yes, please feel free to claim your initial allowance, your wear and tear accordingly. Then for the capital contribution, it's just support to the business. When the business recovers, it reimburses the people who have lent it. Yes. The debt is a debt. The company has to meet its debt obligations. Then capital expenditure, where the assets are in the name of the company, you get the wear and tear accordingly. For the business assets, I also see Michael asking what a business asset is. Michael Twinomujuni, business asset is classified in the Income Tax Act as an asset used in the business, and an asset used owned by a company for use in business, held ready for use in business, and also maybe a partnership. Yes, so that's a business asset. And we shouldn't mix it up with other assets. Yes.
Okay.
Business assets strictly for business in the scope of the Income Tax Act. Other assets, they need to be kept outside.
Okay, thank you, Mark. We have 2 minutes to go to end this session. Now, we are going to, Mark will be able to answer all the questions that are in the chat. So if your question hasn't been answered, please don't go off the call. Now to conclude, Mark.
Maybe just a small one, Belinda, just to interact. Yes, I see something from Sarah Terry Akiteng. She's saying, what if the business closed before filing? Now, actually, that's a very good question, Sarah. I advise business people, where you've closed operations, feel free to deactivate immediately. Feel free to deactivate immediately. Notify URA and then apply for deactivation. There are deactivation forms online. Yes, it's a big challenge nowadays where business closes. Notify the URA, don't keep quiet. If you don't talk, the URA doesn't know. They may think you're there making your millions of dollars when there's actually nothing. And it's also the same people, same challenges I've had from some people. They start up and then they probably don't start operations and then maybe don't notify URA accordingly. Where you've started up, notify URA accordingly. Where business closes down, notify URA accordingly, and you close down.
Okay,
yes.
Thank you.
Yes.
So the title of the business recovery series today was, have you filed your taxes? Why, when, and how? So we have looked at the why and the when. Now the how question, I don't want this person to feel like we have not answered our own objective of this series. So Mark, as you conclude, I know the how requires a bit of a technical skill, but how, give us the how of filing these returns if we can't do them ourselves, and then maybe who we can consult, because the how is what takes us to the tax compliance eventually. So how do we file our returns as we close the session?
Yes, the filing nowadays is it's done online. The Act says notify the commissioner accordingly on an appropriate form. Yes, the forms are online now. It's done online. Previously, before the online systems, you would fill in a manual form, take it to Secretary State Towers. Then the person also writes accordingly. But yeah, filing Pay is done monthly, on a monthly basis. Rental income tax, that is on an annual basis. You file the provisional return within 6 months. And then you can revise it before the 12 months end. Then you file the final return after 6 months after your year end. Now, VAT, PAYE, withholding tax. There's one we didn't talk about, gaming, pooling, and betting. Those ones also file, I think it's weekly. Yes, they file weekly. Then VAT, PAYE, withholding tax. Yes, VAT, PAYE, withholding tax, those ones are monthly. Then corporation tax, you file annually. You file the provisional within the year and file the final within 6 months at the end of the year. Yes, based on given the appropriate sections.
Okay.
Yes, how do we file? Yes, you file online or you notify the commissioner in any appropriate way. In case the online systems are off, at least notify the commissioner in any appropriate way. And then the timelines I've given and why 5 years, let's be good citizens. Give to Caesar what belongs to Caesar. And then also the government owes us the obligation to see that there are good hospitals, there are good roads, there are good primary schools, yes, government schools. Yes, many people have gone to, after COVID, many people have pushed the children to primary schools of government. So yes, we pray that the facilities will be better for the common man. Thank you.
Okay, thank you very much, Mark. Kindly project the slide that has your contact so that if people need to reach out to you, they can get your number. We've come to the end of this session on taxation from Enterprise Uganda. It's been our business recovery series. We want to thank you all for taking time to tune in or maybe to join the session. We have a number of questions in the chat that we have not been able to answer. I'm going to ask Mark to stay on after the session and answer them privately. So if you have a question that he needs to answer, please wait on in the chat. And then we also mentioned that Enterprise Uganda does business health checks, basically to check the health of businesses. How are you doing with your taxes, for example? How are you doing with your marketing? How are you doing with your strategy? How are you doing with your processes? And I'm actually a business advisory consultant for Enterprise Uganda. So if you would like to have your business visited for a business health check, please register on the link that has been shared in the chat. Derek can share it again at the end. We also want to remind you that every Thursday at 9, we do have these kinds of sessions to help you recover your businesses, to help you start your businesses well, and to also make sure that you are tax compliant. I think this session has been able to highlight that very well. I want to thank you, Mark, for sharing your knowledge with us this morning. And I hope that when we reach out to you, you'll be able to help us. Thank you, Enterprise Uganda, for availing this opportunity for us to be able to fix our businesses. I know running a business is not very easy in this country. And thank you all for sparing your time to participate in this session. Until next Thursday, have a great Thursday and a great week. Mark will now go ahead to answer the questions in the chat. From me, bye for now.
Thank you.